welcome on board Anand Tandon as well on the show. Anand, hi, good to be speaking with you. What's the view on IT and FMCG? Clearly, this week has marked a complete turnaround in the strategy, or at least it looks like in the buying pattern so far. Would you be a buyer in select IT and FMCG?
Well, FMCG perhaps more than IT. There is no doubt both of the sectors have been underowned and have underperformed quite considerably. Right now, I think the market is looking for areas to rotate into, given the fact that there are sectors that have actually led the rally so far, which has been mostly PSUs and so on, may take a breather for a while. And therefore, even though there are no great upticks that are likely in IT at least, one is still looking for sectors which haven't moved so far. And in that context, I think is what you are looking at the movement we are seeing today. There is some case to be made for domestic consumption plays to move up, especially those which are related to rural incomes, because that will undoubtedly have to be one of the areas which the new government has to focus on. And from that context is what I said that I would prefer FMCG kind of stocks more than perhaps the IT ones.
Okay, that's the take coming in on IT. What's the take, Anand, though, on FMCG? You think that was just panic buying that we saw on Tuesday and maybe a little bit of follow through on Wednesday, or is there material reason to believe there will be a rural recovery in place pushed by the government perhaps this time?
Well, most of the stars are lining up for a rural recovery, whether it is the fact that, as I mentioned just a while back, that the election mandate does seem to indicate that more needs to be done in rural India. And consequently, the government has to take more measures to increase the income streams there. Also, I think nature itself will take its own course. The monsoon is likely to be good, which will mean that agricultural income will possibly be better. The crop output is likely to be better, and perhaps with some support from the government, we are likely to get better realizations as well. So as a combination, I expect to see a significant increase in rural demand coming through. And therefore, you are looking for direct farm plays as well as indirect ways uh, of looking at where rural consumption can actually increase demand. FMCG is a default play. You would want to kind of, because many of the staples, etc., haven't done anything for many years now. But that said, it's not as if the volume growth will pick up in a big way. And overall, these are very expensive stocks. So from a portfolio sector rotation point of view, I think there is perhaps a little more steam left. Bottom up, it's not as if it's a screaming buy, but even then, compared to many of the other sectors, it still looks relatively fine.
Point taken. So, but since we're talking about rural recovery, what about the allied segment? And I'm talking about, let's say, chemicals, for instance, or the pumps company, or the other allies which is there in terms of the water infrastructure, etc. Is this also one of the ways to probably play that?
Well, certainly, almost everything that goes into the rural part of the country will be something that will have some triggers. I am not so certain about the water play, etc., because that's largely capex driven and has to be therefore funded by the government. The rural consumption plays are the easier play, and I'm saying, I would expect that even the agri input companies can be doing quite well. So you mentioned chemicals, and specifically, I would look for pesticides, fertilizers, all of that should see a resurgence in demand given the context in which we are operating, which is forecast of a normal monsoon.
Kunal, where is it that you are seeing opportunity within chemicals? I recall, pre-budget, pre-elections when we did the show, you said avoid chemicals altogether. Has your view changed now?
Not really. I think many of the stocks are still trading below their long-term averages. So I think the concern over here, Aisha, is that many of the stocks have fallen down by a margin of 20-25%, the likes of, I think, SRF, Naveen Fluorine, Gujarat Fluor, etc. And add to that Tata Chemicals. And out of them, I think maybe 3 out of 4 or 80% of the stocks within the sector, they're actually still trading below their 200 DMAs. Now, at a point when the markets are into a breakout mode, where there's short covering into underperforming sectors, if stocks like the chemical packs, if they still remain below their long-term moving averages, and there is no meaningful short covering or even a rally which tries to challenge the long-term averages for many of these names, it indicates that the sector would still be a laggard in terms of price performance. So you may have those bouts of rallies for these stocks, if the market also moves up higher. But then I think in terms of a meaningful trend, I would still be a bit wary into the chemical sector. I would believe that if someone is looking to buy, then you have to wait out for a point where, for example, Navin Fluorine crosses that 3450, 3500 mark, which is almost 5% from current levels. Tata Chemicals, I think closer to 1130, 1140 is the first major resistance for the stock, and I think that could probably decide the start of an uptrend. So I think it's possibly another 5% for a breakout move for many of these names. I'll wait out for that.
Okay, point taken. So that's the view on chemicals. Morgan Stanley as well as Kunal not yet very positive on the chemicals, might wait for a bit of a turnaround. But time now to take it across to Ansh to get the list of the big price volume buzzers.
Right. Ramco Cement will be the first stock in focus as the stock has given a good breakout from its downward sloping resistance trend line with volume of over 4 times its average volume of last 20 sessions. Also, the stock has surpassed about its 50 DMA, which is a very positive sign. Apart from this, Avanti Feeds will also be in focus as the stock has actually given a breakout from its reverse head and shoulder chart pattern, which was intact since start of this year. Also, the stock has touched 2-year high with volume of over 29 times its average volume of last 20 session, indicating very strong participation in today's breakout. Lastly, Coforge will be in focus as this stock has also given a breakout from its reverse head and shoulder chart pattern, touching 1-month high, forming higher high for 4th consecutive week. So in this phase, this also stock looks positive. And lastly, Steel Authority has high potential of getting into ban list. So keep an eye on the stocks.
Taken. Vinay, what's your view on some of these names that Ansh mentioned, the likes of Coforge, Avanti Feeds, as well as Ramco Cement, and the possibility of SAIL getting into a ban?
Mentioned that there is a typical textbook inverse head and shoulder pattern breakout, and today it has also surpassed the 200 days exponential moving average. It was already up above the 50 days EMA. So the IT index has started performing and reversal bottom formation signs are there. So I think IT could continue to extend this rally, and Coforge is looking good to me. The next resistance for Coforge technically comes in at around 5800. So this positionally target could be around 5800, and the support is placed around 5170 odd level. So I'm expecting this rally to continue in the stock like Coforge. Talking about the sale, it has fallen and retraced up to most of its gains, but still the trend is not supporting. And whenever in the history you've seen that whenever stock comes into a F&O ban, it remains subdued or consolidation into consolidation phase for a while. So from the metal space, sale is not looking that strong relatively. But if you were to look at the stock like Tata Steel and the JSW Steel from the metal pack, they looks much better as compared to sale. So there are other opportunities one can look at. Sale should be ignored as of now for the short-term trading.
Okay, point taken. So yes, SAIL is interesting, and the bar chart will come up for you on the screen. There was that large green bar, and the stock is right now 4% higher. But in terms of the other, segments that we want to discuss, of course, banking as well as NBFCs is one space. And interestingly, today in the RBI governor's speech, he did talk about some of those NBFCs or the microfinanciers, which actually give small ticket loans, but the interest rates are way too high, or there are some hidden charges which they are not, kind of articulating well to their customers. This is a subject we raised with Viral Shah as well of IIFL Finance, and he believed that some of the MFIs have articulated that they're looking at cutting their interest rates, the likes of Credit Access Grameen as well as Spandana, but the rest of them might have to follow suit. Listen in to the conversation we had with the analyst at IIFL.
Primarily, it's the NBFCs which is there, which actually the NBFC MFIs, where this issue is in terms of the higher rates. The ones are Credit has announced, for instance, that they are going to cut rates. Similarly, Spandana has announced that they are going to cut rates. So we are seeing this trend across all the MFIs, and it should play out for the other MFIs also over the course of next few quarters. Impact is going to be actually gradual, given that these are 2-3 years fixed rate loans. So the impact is always on an incremental basis. So it will take 2 to 3 years for it to play out fully in terms of the financials. And the quantum of it also would vary. If it's a 50 or 100 basis points of kind of a rate cut, in the kind of the construct of the ROAs that MFIs make, it should be easily digestible.
Okay, that's the view coming in from the house of IIFL Securities. In the meantime, just looking at the market screen while we're counting down to the live high. and 38 points away now. So once again, making that push, or attempting that push at least, to scale up and bridge the gap from the previous high to now. Holding up a good over 400 points up in the green. M&M, Wipro, Techem, Tata Steel, Ultratech Cement, Infosys, and even Bajaj Finance. These are your big movers in trade today. Bharti as well holding higher by about 4%. Titan looking good by about 3.5%. ONGC up almost 3%. Even L&T and some of the private banking names which didn't quite participate yesterday, they too have made a decent comeback. Kunal, still betting on HDFC Bank and ICICI Bank?
Yeah, HDFC Bank and Axis Bank, I think, yeah, so I think both of these stocks are very strong even at current levels. And, the best part is that these stocks have not yet come back to their 3-day, 5-day swing high, which means the high which was made just one day prior to the election results. And that could be a room of another 3% to 5% upside for these names, which means, if the top heavyweight private sector banking stocks are yet to come back to a breakout mode, the bank nifty should also follow suit. So I think in that sense, I would probably believe that this could be a decent short-term trade, for someone who's looking out even as a next couple of days. I would believe HDFC Bank should probably come back to that 1600 odd mark. So 1595, 1600 could be a immediate target for the stock.
Okay. Anand, is that your feeling as well, that it's the beaten down banking names, the large private banking lot, which will now make a comeback, and it's already begun actually with some of them?
Well, I've been bullish on that sector for quite a while now. It has not performed at all. Every dog has his day. It's perhaps time to get back. At the end of the day, finance and banking related stocks are form almost a third of the Nifty, and that can't be underperforming if the Nifty has to continue to go up. More importantly, both from a valuation perspective historically as well as relatively to the rest of the market, this sector has now become quite cheap. So the larger companies, the private sector players, which have been kind of dragging their feet, are certainly attractively valued at this stage and are quite likely to resume their growth journey over the next few years.
Anand, what should one do about the rally that we have seen in Amara Raja as well as Exide this year? I mean, part of the street has a clear FOMO feeling because they missed out on that, and the other half is wondering, should they book out? What should they do? Perhaps add. What's your view on Amara Raja as well as Exide? And we should pull up the year-to-date charts for these companies.
So whenever any company kind of goes through a major upswing, I wouldn't like to comment on the FOMO, but the reality is that it basically borrows from the future in terms of the returns that it's able to get. Amar Raja, for example, one of the major issues is what is it going to do in the EV world? We haven't sorted out that problem yet. And therefore, there are some existential challenges if they don't sort it out. Exide at least is better positioned because they have some tie-ups on the EV side as well. So between the two, I think at least in terms of where the business strategy is headed, it is clear that Exide is a little further up the curve than Amar Raja is. That doesn't mean that the management there must not be trying. They must be trying to find some kind of technology tie-ups as well and ways to stay in the EV space, because any battery manufacturer knows that maybe that is something that you'll have to cover. Overall, as I said, there is a certain level of growth that you should expect in these companies. And whenever the growth oversteps itself, you have to be assuming that going forward, that is the future growth is therefore going to be a little less. I don't believe that chasing stocks is necessarily the best way of investing.
Okay, choosing the stock might not be the best way of investing, but in the meantime, this is an issue we've been raising at ET now, and it's about the kind of tumultuous journey that we have seen in the week gone by, and the mutual fund investors which are trying to perhaps, put in some orders to get the mutual funds on June 4th when there was that big decline, couldn't get the kind of mutual fund allocations that they wanted, and the NAVs that they got were of June 5th, which meant that they missed out on the kind of gains that were made within one day itself. And that's the issue. We've kind of reached out to SEBI as well as AMFI as well. My colleague Anurag Shah has been doing the works around it. Let's take it across to him to get an understanding as to what transpired, who got impacted, and what's the way forward. Anurag, fill us in.
Market regulator SEBI has taken cognizance of issue faced by thousands of investors on 4th of June during the election day, where they have invested on 4th before the cutoff time, but they got the NAV of 5th of June. So SEBI has asked for data from all concerned stakeholders, and SEBI will look into the loopholes. So in future, this can be rectified. So on 4th of June, during the election results, when results were coming, Nifty fall around 6%, and many investors made investments in a mutual fund scheme before the cutoff time of 2 p.m. But thousands of them received the NAV of next June, and on 5th of June again market rallied by 3%. So the benefit or the advantage investor wanted to get from the fall of market, they could not take up that advantage because they got the next day NAV. So exchanges, BSE has just now issued a clarification that there was no technical glitch from exchange side. There were numerous issues where UPI payments were received with a delay. So due to that only the next day NAV was given to the investor. So that is the statement issued by BSE. So there is a probability that payment aggregators must have not settled the money, and that money is not reached to exchanges, and therefore they got the next day NAV. So SEBI is looking into the whole issue, so loopholes can be rectified, and these type of incident should not occur in future.
Okay, in the meantime, let me take it across to Sharad as well, find out what is all the buzz around the dealing rooms. He's been picking up some info on PG Electroplast. Sharad, what's the cover here?
Well, yes, the contract manufacturers are in focus, and today we saw Dixon Tech also hitting the 10,000 mark. But what we are gathering from the dealers is the stock which is in focus is PG Electroplast. Now, dealers are stating that domestic institution buying is coming and a PMS is a likely buyer. Now, interestingly, the volumes have picked up, coming in at 3 times its 20-day average as the stock is hitting its record high levels. Now, the key domestic institutions which is already invested in the company includes the name of Nippon India Mutual Fund. Now, we did some couple of channel checks also, and what we are gathering from sources is that a large export order is expected for the company, especially in the washing machine, TV and the AC segment. Now, this export order is expected to come from an MNC.
Sharad, so that's the latest on PG Electroplast, but you did raise that point in the morning, Sharad, about IIFL Finance and the likely special audit that happened and got over on June 4th, and you talked about how the restrictions might be lifted soon. Run us through that story again, because the stock is up 13% right now.
Well, yes, in focus is IIFL Finance, and the cover on the street is that RBI is expected to lift restrictions on IIFL Finance over the next 4 to 6 weeks. Now, on June 4 itself, the special audit was conducted by RBI and it was completed, and also the company had submitted its reports to the regulatory authority. Now, RBI had placed restrictions on the company on the gold loan business on March 4th itself, and RBI had actually observed certain supervisory concerns in the gold loan portfolio. Interestingly, the stock has corrected 32% from the day this was announced by the RBI from the March highs itself, and also the street is expecting that no adverse comments are expected from RBI's findings.
That's all the buzz across the dealing rooms and the chatter that we're picking up. 51 points away. Seems like it's going to maybe happen next week, Kunal.
Yeah, next week,
Yeah.
Monday. I think we'll reserve some jubilations for Monday. Maybe.
And hopefully we'll have reason to, because we have the India-Pakistan match on Sunday, the T20 World Cup, and there is all reason to believe that perhaps we'll have something to cheer. Of course, it's going to be a super Sunday with the oath-taking ceremony as well of the Prime Minister on June 9th, which is Sunday at 6 p.m. But at 8 p.m, all eyes perhaps will be on that India-Pakistan match, which is lined up. Not been a great journey for Pakistan so far, given the debacle that happened yesterday with the United States team, but hoping that they win it, India wins against Pakistan as well. So let's see whether we make those all-time high levels on Monday or perhaps today itself, because it's now down to 40 points.
Yep, closing in on that gap, 44 points just left to go. But yeah, let's see whether it happens next week in jubilation of the Super Sunday that's lined up. But anyway, that aside, today, of course, has turned out to be a good day. I don't think that 45-point gap is really that meaningful. We are practically almost there in any case. But Bharti, M&M, Infosys, Tata Steel, these have been some of the big leaders that have been extremely buoyant all through this week. Vinay, looking at the kind of, sectoral rotation that we've had this week alone, barring, of course, Tuesday's crash, where do you think leadership will now emerge come next week?
Leadership definitely will change. No doubt, we have seen some good recovery in the PSUs, which were outperformers previously. But I can see some strength coming back into the sector like cement sector. Then chemical sector has also bounced back from the lower levels. IT index is started performing. And if we talk about the IT, though it has risen more than 8% this week, it is still down by more than 10% from its all-time high. So I think there is a huge potential, and short covering might take in I take the stocks in IT segment to extend the rally. So I think IT is the index. Another sector which I am expecting to do well is the cement and followed by the chemicals. So there could be a leadership change in the coming days in the stable market. I'm expecting these sectors to do well.
Okay, point taken. So that's a view coming in as far as some of these stocks are concerned. But let me take some of the BTST ideas as well from our chartist. Kunal, what's the BTST trade?
So I'll go to buy calls. Wipro is the first stock which I would suggest as a buy from the IT pack. Looks attractive for a target of 505. I'm revising the stop loss higher to 475 for traders who are looking at a fresh bet. Balkrishna Industries is something which is also coming back into a breakout mode. So I think after that fabulous up move post results, the stock had gone through a choppy move from 3,100 towards sub 3,000 mark. Now I think it's making a strong comeback. So I would suggest a buy with a target of 3,400. Stop us at 3,050.
Okay, and Vinay, what about your BTST trade?
I would go with the Reliance. So Reliance has not participated that, and day before election result, it closed on a strong wicket, and after that, because of the market's fall, it fell. But I think it is going to resume its uptrend. Today it is up by 2.5% with a rise in volume. So Reliance at 2940, I'm recommending going long. I'm expecting that it should give a 3 to 4% more. So for the BTST, 2% is okay. So we can expect some target of around 3,000 odd levels in Reliance, keeping a stop loss at 2900. And the another stock which I would go long is the IRB infrastructure. IRB infrastructure. Today we have seen that construction and infrastructure stocks have done very well, and IRB is closing on closing at an all-time high. So though it is up by 10%, but I still believe that it can easily move 5 to 7% in the coming session. So at 77, one can go along with a stop loss of 75, and the upside target which I see in the IRB infra is around 82. So IRB infra in the mid cap segment and Reliance in the large cap segment, I would go long.
Right, okay. In fact, the other big talking point in the market is what are the themes which are here to stay, and just taking a leaf out of what the Prime Minister as well said on the sidelines of the big NDA meet, wherein the NDA leaders have met the President now and are staking a claim to form the government. He did talk about a greener India, talking about the future of where he sees the country shaping up. And, one, of course, that is a very big theme that's been playing up in the market as well. We chatted with Vikash Kumar Jain from CLSA and found out as to how this makes or translates into an investment opportunity as well.
I would say that our opinion about those stocks is that they definitely remain great medium-term bets in general. There is clearly talks of, maybe even not just, if you were to look at broader energy and renewables and some of those, there's more talk on the hydro side. There's, of course, a lot of talk on EVs. I just need to divide my view based on horizons. If you were to look at more from a 6 month to 9 month kind of a horizon, that the fact that they have rallied so much could impede significant outperformance in the near term. But having said that, clearly from a more medium-term perspective, they remain pretty good theme.
Okay, so that's the latest coming in from the house of CLSA. Of course, they also came out with a note as to what they expect in the Modi 3.0 era, both for the capex as well as the power sector. But Anand, what's your take within all of these power names? And I'm talking about the thermal energy plays as well as the wind energy plays, which have seen quite a bit of run up, and even financiers for that matter, PFC, REC. Should one hold on, or would you recommend maybe kind of booking some profits there?
Well, it's a sector which is going to do quite well, and the demand side is very robust at this stage. But having said that, they are utilities at the end of the day, and they are regulated utilities at that. Therefore, the kind of return that you can expect for both NTPC and Power Grid is really dependent on the capex and the capitalization that they do and therefore the return that they are able to get on their capitalized assets. That automatically puts a cap on both the growth as well as the levels at which they can trade at. Currently, my belief is that they are trading higher than the levels that are fundamentally justified. But given the kind of momentum that the market is in, it may not necessarily mean that investors should rush out to sell. So fresh money buy, I don't think is indicated. If you are already holding on to it, the best I could suggest is that maybe put in a trailing stop loss. These are companies which are very liquid, should not have a problem in exiting if you really need to.
Right, okay, that's the view coming in some of those energy pockets that have seen quite a bit of buoyancy in trade as well. Kunal, REC, PFC, IREDA, of course, doesn't have much of technical history. But given that they've been very active stocks, both on the upside as well as the downside, PFC, REC, what do you foresee now? And you could add an NTPC as well to that list.
So I think NTPC could be something which could be bought, but I would not be rushing into going for bullish bets on REC PFC, because what typically happens is when the market gets into a sell-off, there are few sectors in which were maybe darlings in the previous trend. Those sectors, they generally tend to lag favor in the next set of uptrend, and I think that's what we've exactly seen for the likes of REC PFC. You look at even the likes of the OMC pack. I think BPCL, IOC, etc. These stocks are still, I think, 10-15% below their Monday or Tuesday highs for themselves. So that also indicates that the markets, and that too in this kind of a market where we are just about on nudging distance of making a new high on the indices. So I think in that front, I would definitely believe that there is definitely some kind of underperformance which could probably come back into these names. So I think the best level to buy these stocks would be either a retest of the previous lows. If not, then at least maybe another 5% lower from current levels.
Okay, point taken. That's the view coming in on some of these oil marketing companies as well. In the meantime, let's listen into what the market veteran Madhusudan Kela had to say regarding the stimulus week and how should investors really wade through this volatility. Listen into a slice of the conversation we had with him earlier.
The next 5 years, apart from other thing, I think the rural area will be real focus of this government, right? And as we have seen Mr. Modi's track record over so many years, right? He will recognize it that is where the party has actually not done well, specifically in rural areas. And there is no denial that the purchasing power in rural areas had gone down. It was reflected into the growth of a lot of FMCG companies. It was reflected into our interaction with these kind of companies over the last 3-4 years. I think it will be a tremendous focus area in the next 4 to 5 years. And from a stock market perspective, the new winners actually could come from this sector, right? I'm not at a liberty to talk individual stocks, but we are invested and rightly positioned in this sector, and we will look for more opportunity to invest into this sector, considering the fiscal situation of the government and considering the fiscal powder which they have. I think the government will be very, very proactive and liberal to address the issue of rural India.
Okay, on that note, we'll thank all of our experts for joining in, Anand, Kunal, as well as Vinay.
If you like this video, then like, share and subscribe to ET Now.